Stephanie Livingston. I'm so happy to see all of you here today for today's training. I will be teaching things today here that you cannot learn in a classroom outside of here, because what we're learning today comes from operational experience. We are going to be inside academia for a little while to discuss the framework of the nuts and bolts of how these things move inside your profit and loss statement, but then we will transform from academia to operations, and then we're actually going to learn some really great stuff today. So thank you to James and Amy for hosting today and having me here. This is my first time here at Magnolia Woods, so thank you. And this is a slide I put together just for James and Amy, because guess what? They're A&M grads, and I'm a UT grad, so the howdy is supposed to be a gig 'em howdy and a hook 'em Longhorns at the same time.
Watch them suck you in.
So I have given you some handouts. These handouts are largely for you to take home for study materials, and they will make a lot more sense to you after you've taken my class. If you want a copy of today's slides after we're done, just email me. I'm happy to give you a copy of the slides by email. And there are some goodies in your slides to note. One of your goodies came all the way from Louisiana, from a restaurant called Steamboat Bill's. And my husband and I recently went on a trip to Louisiana. We stayed in the swamp on a swamp boat. It was lots of fun, and we ate at Steamboat Bill's. But the reason I brought this menu back to you is Steamboat Bill's was built on the blood and sweat of one person, a small businesswoman who had a dream, had a passion, and who was willing to work hard. So on the back of your menu, you will see a little caption that describes her story. And if you have a chance to go to Louisiana and eat at Steamboat Bill's, I highly recommend it. Also in your handouts is something I'm calling a cheat sheet. For those of you that struggle with understanding chart of accounts and what section of the chart of accounts a particular account should go in, this cheat sheet may be helpful because it's organized by section. It starts off with your assets, then it goes to your liabilities, owner's equity, or equity retained earnings, and then it flows through to the profit and loss statement, which is our focus here today. The profit and loss statement, meaning all categories of income and expense, which also include cost of goods sold. Cost of goods sold, since this is a facilitation of QuickBooks, cost of goods sold is not called cost of goods sold in QuickBooks. When you're looking for it, you have to look in expenses. You pick expenses and then you find cost of goods sold. So if you're thinking cost of goods sold is its own little section, you're going to be lost and confused very quickly. So that's why I gave you the cheat sheet, and just remember cost of goods sold is an expense. It's just an expense that's grouped differently. So let's get started, and this is a tips and tricks class. So these are the objectives for today. These are the things I would like for us to leave this room having a really great understanding. First of all, I'm going to spend a lot of time on ops margin, operational margin, which just means sales minus cost of goods sold equals margin. We also call that the top margin, and we also refer to that section of the profit and loss statement as above the line. So everything today is going to be divided into conversational topics directed to either above the line or below the line. It's either operational metrics or it's general and administrative. We'll also talk about accounting method, because when we're looking at operational performance, cash basis accounting is not going to help you. It only tells you cash in cash out. It doesn't necessarily relate directly to performance unless you're the one person out there that pays your bill and gets paid without some type of net 30, net 15. If you are that rare person, then your cash basis profit and loss statement will be the same. But largely, by far and away, that's not the truth for everybody else in the world. So we're going to talk about also closed periods and what that means. Operationally, in the world of accounting, we have open periods and we have closed periods. So just for an example, last year, if you've done your taxes, that refers to a closed period. We're no longer making entries into and from a closed period. And open periods in a current year usually refer to your current month. Because in accounting, you usually close every month at the end of the month. And once you've closed your month, you should be making sure that you mark that area of accounting setup where you tell QuickBooks, yes, I've closed my month. And once you've closed your month, we're not making entries to and from that month any longer, and no accidental changes can take place if we've closed the period. Now, the other thing I want us to get to later on in this class today is where we can understand the movements of small business on the go like this. And at the end of the class, my goal for you is to be able to look at your operational P&L and at a glance have some kind of understanding that's meaningful to you in your business. And it won't take 1,000 reports to do this. It should be visible to you at a very high level. Your profit and loss statement should be your best friend. And if it's not, we're going to figure it out during this class. And we'll figure out how to make your profit and loss statement meaningful to you. And lastly, once we get to that point, we're going to understand everything largely in terms of percentages and not dollars. So just keep that in the back of your mind. This is where we're headed, and these are the things I hope you guys learned today. Bonus tip, I almost forgot about that one. The bonus tip, we're going to understand what the difference is between good margins and bad margins. So here we go. This class is for any business, and we're focusing today on operational performance, not cash in, cash out. And we're talking about operational performance in terms of what it means to you. I have a very diverse group here. I have people who have a basic understanding of profit and loss. I have people who have business degrees. I have people who are in different roles, not necessarily even in accounting here. And I do also have a business owner. So hopefully I can touch all the high points for everybody in the class. And if I lost you and you're confused at some point, just stop me, because everybody probably has the same question you do. So this is a class for small business owners and small business people involved in small businesses in some way. It started with somebody's passion, and the passion is what continues to drive the journey. And what is the key to success? Largely, it's a combination of a lot of things. It's relationships, timing, determination, a little bit of luck, but smack dab in the middle, it's opportunity. So you can have all these things, but if you don't have the opportunity, you don't get the opportunity to start. So here's my advice. If you have the opportunity to start, but you don't have the opportunity to start perfectly, my advice is go ahead and start. Because the biggest mistake that small business owners have, great dream, great marketing plan, etc., environment's not perfect, so they never start. Start imperfectly. Figure it out as you go. Stumble, fall down, get up. Figure out what went wrong, fix it, make it better the next time. Continuous improvement is the only way it's going to keep going and getting better. So, why isn't everybody a small business owner? Why isn't everybody? It sounds fantastic. You set your schedule, you get to decide when you wake up, all of this. Why isn't everybody a small business owner? Well, somebody that's all too familiar to us in the world has said it this way. Opportunity is missed because to most people, opportunity is dressed up in overalls and looks like work. So yes, it is dressed up in overalls and it is work. But hey, it's fun. It is passion. So number one today, if you don't learn anything else in my class today, please learn this. We are going to keep our eyes focused on ops margin. Ops margin is operational margin, and it has to do with accrual basis magnifying glass, not cash basis. So when we are talking about ops margin, these things can be confusing because there's lots of things that are the same thing, but they have different names. So sales on your P&L is sometimes called sales. Sometimes it's called income. Sometimes it's called gross income. But sales minus cost of goods sold, which I think everybody's clear on the cost of goods sold, after you take out the cost from your